It's Friday. It's March the 27th, and Friday has really continued where Thursday left off. The chart next to me here is the world's most important stock market, the daily chart for the S&P 500, the 500 biggest companies, quite a diverse index. 500 companies, a big index. Next biggest is the Nikkei with 225. And you compare that to the DAX, which has only got 30 or 40 that's been upgraded recently. So a big, wide measure of US economy companies, the biggest economy in the world. So it's a really key. And we are under 6,500, as we said yesterday. And the key line here, this big old fat blue, purple line here, is the mother of all moving averages, the 200 period moving average. That's the average price over the last 200 days. And it's a bit of a quirk on our setup here, but you can see we are actually under the 200-day moving average. And as I shared on, I think on my LinkedIn and on Discord this morning, Paul Tudor wrote that nothing good happens under the 200-day moving average, and obviously it's a buying opportunity for some. But once that is breached, and that candle today looks like quite a big breach. Obviously, we bounce back quite quickly if this war comes to an end. But we are now entering our fifth week. It's day 28. Oil's been over, Brent has been over $100 for 12 consecutive trading days today. It's gone higher again this morning, and it's recovered to the key Fibonacci level, the key 61.8 fib level of that big sell-off we saw on Monday. So we look at the Brent chart here, 107, nearly $108 this morning. 3 consecutive days, or third consecutive day higher here for the oil market. The key Brent, the key worldwide benchmark for the oil market, up again this morning, 107.90, 107.80, the spread on our trade here. So big move up, and as you see the key 61.8 fib level, the golden ratio. Is it going to stop there? Are we going to continue to pump higher and add an I 115 and 120 to the upside? Obviously, all depends what happens during the US trading session, and more importantly, probably what happens over the weekend. Remember, Fridays, last 3-4 Fridays since this war started, stock markets in the US have all closed lower on the Fridays. So big sell-off yesterday, down 2.38% on the NASDAQ 100. And we are now, as far as the NASDAQ's concerned, we saw the S&P itself with, as far as the NASDAQ is concerned, there's a 200-day here. We breached that first back here on the 13th of March, but big breach was there on the 20th last week into 24,000. And then yesterday we gave up the ghost of the 24,000 support level, which had been a key zone here going back to October and late November. 24,000 had held quite well. And as you saw, as we were going up here, it wasn't any resistance at all as we went up. So it burst through it on the way up. So we held it first, held it second, and then the third time, because of the war, you don't know what's caused it. We just burst through it significantly yesterday. Obviously, we could, as I said, we could recover if there's some positive news, but we are lower again in the futures market for the NASDAQ 100. We are now in a correction zone, which means we are down 10% from the high we saw back here in January. For the NASDAQ 100. So we're down over 11%. We are now down over 11% from this top here at 26,240. And all-time highs, there's that W shape, and a big move down. So many were talking about, head and shoulders pattern holding at 24,000. That's given way as the world sort of turned on its end. It's the uncertainty, really. Markets, as we say all the time, markets hate uncertainty, and it's the uncertainty, the mixed messaging, particularly coming from President Trump about what's going on. The Iranians received more missiles incoming this morning from Israel. They've retaliated themselves, and it's ongoing. Obviously, 10,000, apparently up to 10,000 US troops are on their way to the Gulf. There's chatter about trying to take Karg Island, the key pinch point for the Strait of Hormuz. There was talk yesterday. Trump said, the Iranians had offered him a present earlier in the week, and he clarified that at the at the member the cabinet meeting yesterday when he said up to 10 tankers or boats, he called them 10 boats getting through, Western oil tankers getting through. But this morning I'm seeing there's a ticker here on my Bloomberg feed, my Reuters feeds telling me that obviously the Iranian regime. Hello, my friend. What do you think is going to happen to euro? Sorry, let me just put you up. Casilla, what do you think is happening to euro? Well, it's heading for 1.15, I think. It may not, but it's looking that way. Stocks have opened lower. Stocks slide into the in the first half hour of trading. S&P is down a whole percent. Nasdaq's down 1.3%, and the Dow is down a whole 1% as well. So we're getting lower. Literally, as I'm speaking, you see this is moving lower here on the Nasdaq. We just open the say the hourly chart. It's continuing to track lower, and we're at 23,300 or under 23,300. So panic Friday. The other key thing here to don't forget, guys, it's Friday. It's the end of the week, but for many institutions, they will be wrapping up their end of March and, more importantly, their end of quarter positions as well to close out the week before the Easter break, before many people go off on holiday tonight for a big 2-week break over the Easter period here in sort of the Western world. And we are wrapping up positions, obviously profits being banked from this very, very strong run we've had on the equity markets. But, equities weighed significantly by the uncertainty and the expectation that interest rates are going to have to go up, not go down, rather than stay the same. 4 weeks ago, we were all for two rate cuts, 25 basis point rate cuts from the Fed by the end of 2026. That's being turned on its head. So not only is it not going down, it looks like there's about a 50 odd percent now chance, 60% chance of a rate rise as early as September if the inflation follow through comes from this elevated oil price. And it's really, as I've been saying for 4 weeks, it's all about the oil price. It's all about this elevated oil price, which we started our chart with. So this is the hourly chart on oil today. So yesterday morning, earlier in the week, on Wednesday, we were down here at 98. We went all the way down to 96 on Monday's announcements from Trump. But that's all been turned around. As I say, we are now, interestingly, you can see here, we're now we broke through the 61.8 of the sell-off on Monday, and we're now sort of hanging on to it, understandably, but we're moving towards 108 there on Brent. So, things are not great from people worried about energy crisis, energy prices, and it's still going to take a long time for this to fix, even if we stop things going on there. So Kiss is just asked about Casilla, Train's just asked about the euro. Well, I say the euro, is much closer to 115 than it is to 116. The trend is down 123 this morning. Euro's bounced. This is the hourly chart. So the trend is still down, my friends. To take this higher, it needs to get above that green line now, which is where the 20-hour. Can you see that properly? Actually, let me make myself. Actually, you probably can see that. Yeah, I'll probably just as well. Right, reset that. There we are. So this is the hourly chart on the. You can see that the hourly chart. You can't see that, can you? Let me make my great big head a bit smaller, so you can see the chart a bit bigger. Well, the chart's going to be able to get smaller. But what do you think is going to happen to Europe? Well, as I say, it's had a good bounce here at 12, 1 and 2. The data is just come out, so I'll have a look at the data in a minute. So that's moved higher, but it needs to break literally where that green line is there. So 115, what's that green line there? 115, 28, call it 115, 13 in round numbers to take this higher. It doesn't look like it's going to. The trend is down, so we're looking for short positions on this. We go down to the 5-minute trading time frame. That's what I don't know what time frame you're trading this here, but certainly let's reset that. So we've got a move up. There's that 200 period move now. This is on the 5-minute time frame now, so there'll be some resistance there. And this strategy would have been short there. It's gone against us a wee bit, but that would have been a short position on this mean reverting strategy, because there's our first touch of the outside of the Bollinger Band. Then we're looking for a cross down. That would have been a short that didn't play out. It's continued to move higher. continues to move high, and now it's come down there. So that would be a legitimate short. Stop loss up here in the 5-minute time frame. It's against us, and we're out of the money at the moment as the data's just dropped. Let me just have a look at what the the University of Michigan data is telling us. Let's bring in the calendar. Uh, University of Michigan has come in at 53.9, so it's weaker than expected. Let me just bring in the uh, should have the inflation number as well. It's not seen as a minor issue this morning. I'll come on to the amount of Fed chat we've had, and we've got to come as well. So inflation expectations 3.8%. So that's risen quite significantly from 3.4%, understandably. But it's not as weak. Well, it's weaker than expected. Consumer sentiment 53.3, obviously quite understandable. This is a revision of the number from last week. The revised number, the flash number was last week. If we look at the chart of this number, you can see it's towards its lower end, and the US consumer is absolutely key to the US economy. As long as they're buying houses, investing, buying products, buying services, how they feel. This is what this is, and it's all about sentiment and numbers. Obviously, the war and the hard data from the war has taken over any sentiment indicators or even hard data we've seen from inflation numbers this week. But you can see overall, it's at the low end of where it's been. If we try, yeah, we are. We go all the way back to 2005 here. You can see, it's at very, very low levels. This was uh, the post-pandemic June number. The data wasn't. I'm not sure the data was correct there, but look how low we are here at 53. Back here, 2008, the 2008 financial crisis in consumer, the University of Michigan consumer center was down at this levels, and that's where we are again now. There's no, at the moment, there doesn't seem to be any good outcome for the Trump administration in this war. Obviously, he's going to stick at it to so not let, as in their view, Iran get a nuclear weapon. Whether they were actually developing a nuclear weapon or not, it's somewhat debatable. But obviously, the Hawks believe they certainly were. Which is why he said he ripped up the 2015 agreement that Obama had done with the Iranians, but it's still emboldened them. And remember, it was the Israelis that struck first. Uh, Netanyahu has got the backing of Trump. They struck first, a preemptive strike. The Israelis were calling it 4 weeks ago today, and it has. It's sorry. Has it gone to plan? Very difficult to tell at the moment. Obviously, mass destruction um, of the navy, of the civil defences of in Iran, of the missile bases. But having said they completely destroyed all their nuclear facilities back in June last year, they're still threatening that they're developing a nuclear weapon. So sentiment very much hammered, and that's going to weigh politically in the United States as well. So it's a key reading 53.3 for consumer sentiment from the University of Michigan's well regarded business school. So lower than expected, and a whole over 2 points lower than it was on the first reading last time, 55.5. So and then a tick up, quite a significant tick up as well in expectations for inflation. So it's coming down the line. I was just saying about the lots of Fed speak we've had. These guys here yesterday, Cook Myron obviously was talking about the expectations of the Hawks of inflation coming up. Myron still obviously, he was the big Stephen Myron, Trump's man from the government now on sitting on the Fed, um, wanting 50 basis point cut in interest rates not so long ago, 25 basis points to last meeting, and then bang, the war starts and everything gets thrown up in the air. But all of these guys that were speaking, Jefferson Barr yesterday as well, and all pointing to expected spike in inflation. Retail sales in the UK this morning pre the most of the war, but again, not as bad as expected, but quite a big decline from last month, which was actually better than expected. It's been upgraded to 2% from 1.8%, but a big negative call for retail sales in the United Kingdom this morning. And CPI not as hot as expected in Spain this morning, which is a bit of a not a surprise, but obviously significantly higher than it was previous reading. But again, not taking into account the impact of the large rise in energy prices, this energy crisis we have for Europe. So, all that said, that's the data for the day. But be careful, watch what Barkin, Daly, and Paulson have all got to say later on. Trump has another speech tonight where he's due to speak at the Future Investment Initiative back down in Miami, his home base of Florida, where he voted by post. Having been a huge advocate of non-postal voting, it's all corrupt and there's no real evidence of that. He voted by post, and interestingly, a Democratic governor got in. On this week's polling down in Florida, but anyway, there you go. That's President Trump for you. So again, obviously, watch what he's got to say. 9:30, so 6 or so hours from now before he speaks. So that's another busy week driven by the war in Iran, and that short there hasn't played out. We're still long. We've been long, or it's been in the path of the volume, but it's not wanting to move lower. It's moved lower, then it's bounced back up. So I'd close that one out if I had stopped out, stop loss. So that would have been the entry at the bottom of this candle on its 5-minute time frame. But by the time we get the stochastics cross again at there, so I'd have been out there. That would have been losing weight before the stop loss at the 200 period, moving average here on the 5 minute. So that's providing a bit of a resistance area at 115. Where are we? 115.29, 115.30. Doesn't want to go over that. But the trade's very much an up trend here on the short term in the last few minutes, so or last half an hour or so. So trending would have been choppy here. Nice short one there. Long trigger there goes against you, but your stop loss would have been down here. So that's long from there on this trend following. The simplest of the strategies. Actually, it didn't break the 20 there, did it? So it's there. I think it's just got in there. If not, it's definitely broke there. So you would have got in there. Perhaps I would have added there. Having a big strong, and it's off its ran. Come back, still not broken the 9 period up dish, and then out on that one there, and then back in there as the date is broken. So that's gone long again. So that's long from there. So initial entry there, second entry would have been on that candle there, given that was a minor. So 1, 2, and then out on that point there. So that would have been entry 1. That would have been entry 2. Stop loss on that one there using this scalping strategy on the 5 minute, where we use the 9 period as our exit. So we'd have got out there, we'd have got in there initially. That was a bit of a risky one, given it hadn't broken properly, but certainly the sorry, let's put that on there. Certainly the second entry would have been there, so you'd have been that's definite, good money from 115.15 to 115.23, 8, 9, 10 pips available. You got in here at 115.10, and that's 115.23. So again, another 10, 15, 10, 13 pips on there, and then gone long again on this one as a continuation on there, and I'm currently out the money, so that would have been another entry there. So that's a continuation of the highs. My stop loss is literally at the bottom of the entry candle. See how it runs to start off with. Obviously, the 9 period is a bit too close, given that we're stalling at this level. We saw on the other market that the 200 period moving average is sat there as well. So this one might fail, but we've gained quite a a good old chunk on that first move up. So it's still trending. It's not reversing. And what would our other strategy be doing? The VWAP would have been long from down here, long, 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 long out, possibly in there, definitely in there, out there, in again there. So we've broken over VWAP, woven away, came back out, and then in again there. So that's gone long here in the last couple of seconds, just around it. We'd have got, you see the difference here. So we'd have got filled there at about 1:15:31 on the VWAP strategy. So we filled somewhere around there on the completion. That kind of given that that's no wick there. So out there, stop loss now, possibly below that candle, certainly below the VWAP through about there. So see how that pans out. So the entry is there, so stop loss there on that strategy. Let's see where that goes. See a big spread on the high condition setup. A lot of people get freaked out by it. You can see there's been some really nice movements, and that's the smoothness of the Heiken-Ashi candle. Look at this morning, easy money. You know, even if you're just jumping out when it goes to green or closing when you get different kind of. Well, look at the strength of that move down. Nice, clean clarity with the Heiken-Ashi candles, similarly going up. That's quite a big there ahead of the data because we're at the VWAP, I would guess, but still perhaps moving up. We could perhaps get back to this. That's the next cluster there, 115.40 to the upside. So we'll leave that one long to the long side. Who was asking about that? My friend, I don't know if you're still here, my friend. But there you go. I'll check that out. Anyway, so yeah, euro up against the dollar following that um, following the consumer confidence numbers. But yeah, it's yeah, what can I say? It's all driven by Trump's statements or non-statements, and you know what comes next. So euro overall, obviously the dollar's on the upside, so it's very much against the trend as well. That's the other thing I should say. The higher time frame trend. So we're stuck at the 20 hour, the 200, just on the 5 minute resistance there. So is this a leg too far, and are we going to move down, or have we, you know, made our low? We're not going to get to 115. But this morning, lunchtime, we got to 115.01. Is that 01 or was that 10? 150, yeah, 115 or 1.5. So we're within 1.5 pips of the key 115 area. And then we've bounced since the 12 o'clock candle, and looks like we may be moving up. As you can see there on the hourly mean reverting strategy, that would have gone long here. That green one's gone long there on the hourly time frame. So that's gone long there. Stop loss on the hourly would be down here at the bottom of the Bollinger Band, and target one is, or is, I mean, it's just there. I wouldn't be taking 50%. I might take 30% off that because it was so close to the entry, and see how we go here on the hourly time frame. So on the 5 minute time frame, we saw we were short, happen, and down we go. So yeah, the longer term trend, just to finish off, the hourly is still short. The 4 hour, whoops, is still short. There we are. You can see that. And the daily is clearly still short, heading for now 115. So, with that bearing that in mind, you know, when you're trading the 5 minute, this rally is very much against the trend. The higher time frames are down, and we're finding struggling at 115.30, which also happens to be where the 200 period moving average happens to be. And as you can see here, the stochastic has been chopping around, but we're starting to move down. The stochastic is starting to move down, even though price action is moving up. So we may have a bit more gulf in this through the 200 period, get us to perhaps 115.40, this little cluster up here, and then to start to reverse. But at the moment, chopping around, we've got mixed messages. The stochastics are moving down. Trend is still to the upside as we saw with the trending strategy. Let's use another trending strategy, the MACD and the SAR. That might be a bit more choppy indeed. did, but it isn't, if you see what I mean. 5 minute there. You can see the cross on the MACD. That's still that's been our best one up, hasn't it? That's a nice trend there. It is, but it's trending this strategy. That's the cross you probably wouldn't have got out. You'd probably got in on that one. Stop loss down here to start off with. And up we go. No, going nowhere. So keep your stop loss below that for a while. Up for 2 minute candles. Don't get too aggressive. Keep it just about there. We come back there, and my stop loss now is, see how it's flattening out. We got a flip of the parabolic SAR there, which could have taken us out because we've suddenly gone short. So we could have closed it out. That's what the parabolic SAR is for on this strategy. So bag some profits there, and then we've restarted the trend there, haven't we? The MACD and signal line haven't changed. It's just the strength of the move was reversed. So whether you re-entered then, you're now out of the money, that might be the case. But certainly if you'd got in again there, because the trend was still with you, you're now suddenly back in the money. You might be wanting to close out as these start to narrow up. But 138, 115.33. So that's nicely in the money. The MACD trending strategy. So as I said, it hasn't reverted. So we're still running against the trend here on the 5 minute time frame, the 10 minute. Again, it's all about the time frames you're trading, Cassia, my friend. It's you let me know what it is, and we'll probe it. But again, you can see there the 10 minute would have flipped. It's crossed there. The 10 minute would have got you in later here at 1:15.15, but you're still in this one. In stop loss again down there. Stop loss at entry now, I would guess. That's been a bit of a scary one. So stop loss now there. Stop loss probably about here now. I've dragged it up, getting a bit aggressive to try and lock in some profits. But 1:15.22 from an entry at 1:15.15, so 7 pips. Doesn't sound like much, but you do that. I say you do that a few times. They soon add up, my friends. And if you want to be really conservative, your stop loss still down at the parabolic SAR all the way there at entry now. So just leave it, see if it comes. But obviously the worry is that you give all that back. Remember, these are only 10 minutes, and there is some signs of a bit of an overstretched here on the MACD signal, and MACD line now just crossing into the above positive, so that's quite positive. So we still may get to that 140 level we saw on the other chart. So euro to the upside. So the story of the week is more of the same, more from last week, basically. Bitcoin, we start at the top of the shop, 66,000 now from that oscillation around. Sorry, that oscillation around 70,000. We can't break away, or haven't been able to break away from the 70,000 level to the upside, but we're certainly breaking away to the downside. We're now 4,000 under 70,000, and it's the trend down has been exacerbated with the stronger dollar and the uncertainty about what's going on. Remember, obviously, big crypto and Bitcoin here. You can trade it during the weekend. Volumes are much lower, obviously, on Saturday and Sunday, but we've had some big candles on Saturday and Sunday, so just bear that in mind when you're trading it. As you can see, we're at the bottom, approaching the bottom end of the channel that we've been in, the 75 top, the 65 bottom. We had buyers back here at the end of February at 65,000. Are we going to see that now at the end of March? But a big down day yesterday and another big down day today. At the moment, we are under 66, so we're just about on 66,000 for Bitcoin. So the trend remains biased to the downside, but we are still in a big old horizontal channel, not going anywhere, but biased to the downside, because we're now back in the under half of the Bollinger Band, which we have been for over a week and a bit now. We broke up on Monday, that bounced, but since Tuesday, Wednesday, Thursday, we were down and moving down quite significantly today and yesterday ahead of the weekend, even for crypto, even though I say it's available. Energies we looked at earlier, but let's just recap. Brent, the disparity now is 10. The divergence, the variance between the two key oil markets, $97 for WTI, 107 20 for Brent. Brent's the epicenter of it all, as I wrote this said last night in our video. But struggling. Oh, we got to the 61.8 and we're down a tad. We were closer to 108, weren't we, when we first looked? But it's looking like three consecutive days to finish the week for the oil market to the upside. Risk still very much off the table as stocks move down, treasuries move down, yields move up, and the dollar remains the one to be part of. So indices, as I say, across the board to the downside. If we just look at over here in Europe, the DAX at 22,300, way under its 20-day moving average. It broke that on the 3rd of March as the war got into full swing. That's the Friday close, and there's the Monday gap. It's far from closed, far from looking like that's ever going to get closed recently, and the trend has just continued down. The one to watch was Monday's intra day low, where we went under 22,000 on the DAX, and we're currently at 22,300. So in to test the bottom of the Bollinger Band again here on the daily time frame, but that's very much a downtrend on the DAX and well under its 200-day moving average. FTSE, on the other hand, is just about to, or tested on Monday into the 200 moving average zone. It's recovered Tuesday, Wednesday as well, got to 10,130 before we sold off quite significantly yesterday. Back under 10,000 and sort of relatively flat today, actually 9,950 we trade on the FTSE. But again, another one that's been under its 20-day moving average since the war started on the 3rd of Tuesday, the 3rd of March, having bounced a bit on the Monday following the attack on the Friday. After markets closed, of course, we did the US markets all still down to 23,988. So we're going at the lows of the day as well now. We've gone lower since we last looked at this. So that was our 2 o'clock candle close. We've been here for a little over 45 minutes now, and we may be finding a little tick up in this new hour. But the trend is very much to the downside. So another one that's trended really nicely all day. So lots of points and pips on the board for you shorters on that one. But again, just to reiterate, there's our 200-day moving average. We've got the 20-day now crossing from above to below the 200. That's negative. 50-day would have already would be yet to do that. I think actually it's just if I insert the 56. Defaults. Yeah. So the 50-day, the other key. Let's make that thick one. So the 50 is up here. The 20, 20 crossed the 50 back in beginning of February. That unaligned, they're completely out of alignment now. They should be aligned. If they're going in one direction, it should be 250, 20. And now we've got 50. Make that, sorry. Can I make that? Make that dotted, can I make that dotted line? I think I can I? Crosses. There we are. So there's the 50, the orange crosses. There's the 20, the orange straight line. And as you can see, we're down. But the faster moving 20 is about to cross the 200. The 50, if this continues, we're crossing sometime during April. So anyway, the point is we are under the 20-day moving average. And as Paul Tudor Jones said a few times, I quoted him yesterday or this morning on our Discord channel, nothing good happens under the 200-day moving average, and that's proved to be the case. 24,000 is given way on the Nasdaq 100. We are moving lower. Nikkei still above its 200-day, a bit like the Dow, a bit like the FTSE, I should say, but obviously very weak as well for March. And under its 20-day moving average and under its 50-day moving average as well there. And Australia, just for completeness, all the ones we've got here. Similar move, already similar to the Nasdaq and the Dow under the 200-day moving average, and that's been under that since the 6th of March. So more front line given the energy requirements of Australia. So 20 crossed the 50. The 20's already crossed under the 200, and the 50 looks like it's going to cross down from above to below the 200 as well shortly. So the Aussie stock market is one that's been hammered the most according to those technical regimes. We've got the Nikkei, it's just close to 20 there, the 200 is still above 200. So the weak yen is helping, obviously, the stocks um, in Japan. So indexes, equities selling off. Gold, 4,400 yesterday, 4,450 today. Uh, on Monday, the panic took us into the 200-day moving average, and there at just above 4,000, 4,100. We were up the start of the week, Tuesday, Wednesday. We were big down day yesterday, rejecting 4,500 again. Uh, you know, rejecting 4,500 again, and we're sort of ticking higher today, ironically. But obviously, Monday, Tuesday, we went down to the wiping out all of the gains for 2026 so far. That's the where we closed 2025 at 4,3,200. Massive rally we've seen in gold markets. I'm sure you're all well aware. But no safe haven bid for gold. It's more the worry about yields and the price of the dollar, and also expectations that the Fed are going to be, or central banks around the world are going to be raising rates, not cutting rates in the second half of 2026 now. Again, the likelihood of that happening increases the longer the war goes on, and the outcome of the war becomes secondary to it. So, anyway, gold up a tad today, but very much against the trend, my friend. So, I don't know if any of you are trading gold today, but just really moving lower here on the hourly. It would have gone short there, but it's not gone anywhere. It's gone against you and stopped you out. So we're on short there at 8 o'clock this morning. It's just nothing to get. It's not really. I find it's a bit more interesting. So, first touch of the outside of the Bollinger Band, and it's gone up, hasn't gone down. It's gone against you, so it's just ignored that. There's a peak there at 12.50. Next trigger short was there, but again, if you don't stop loss there, you got bit out, but then got stopped out probably on that volatility. Then it's moved down. Then we've moved up. Interestingly, on that down cut, would you have got? No, yeah, probably. You'd probably got in on that because the cross up was there, but it's a bit weak. And I waited till that one. I'd have probably got filled there with a stop loss down here. So that's gone long. So that's in the money. That 5 minute mean reverting on the gold chart, and I would be now out because we've had a cross. Obviously, touched the outside of the Bollinger Band, and then out here as that's crossed there. So out on that candle there, as the actually no out now. At 4,455. So we'd have got in down here somewhere. Stop loss would have been down there. So we'd got in at 4,428 and got out at 4,455, following the rules of that. So anyway, let's get rid of the 50 on this. I didn't know they never used to do that. I used to they are staying on all the charts, all the setups. I'll leave the 200 on just for completeness. So that's gold, and again, the trend is very much to the downside. This week, if we look at the weekly chart, I'm going to look at the weekly charts, but weekly chart for gold, we've had two big week last week. I say this week we went in to test 4,000, but we were under 4,500, so a fourth consecutive week to the downside for gold. Similar with silver. But it's turned around today. Interesting, silver. So it's turned our weekly chart green. It was so big 3 weeks to the downside though for silver as well. Let's just do the other assets on their weekly charts as we wrap this up for the week. So there's our weekly chart for crypto. Up week, the first week of March, and the third and fourth week are down for crypto, as you might expect. on a weekly basis. So this was a bit of a blip to that 75,000, and then we're back under 70,000 and moving lower. Um, will we break out of the range under 65,000 and get to the 200 period moving average on the weekly chart sits right at 60,000. So see what next week brings for crypto. Are we going to see buys again at 65,000 like we have at the end of March and the beginning of April? Sorry, end of February and beginning of March. Let's do just a couple of the weekly charts for the uh, um, forex pairs. Euro continues to decline. The weekly remains down. We did have an up week last week, but we are down again this week, still holding 115. That's a key support zone. Looked like we were continuing to unravel there after the first 2 weeks of March. We bounced last week. Are we going to go back down next week? Is 115 going to hold? That's what we're looking for going into the new week. Dollar yen looks like it's eyeing 160 again. We're at 159.86. Will this cause intervention from the Bank of Japan, or is the war sort of impacted where they're getting in? Remember before there was clearly resistance at 158. For the rest, since the war started, we've been over that key resistance area. So dollar stronger against a weaker yen. So dollar very much on its front foot. Dollar, let's do them all while we're here. So next one down is sterling, 133.20, and again big move lower, stronger dollar. Um, from the middle of February down to the low here at 132 a couple of weeks ago. Better week like the euro last week for sterling against the dollar. It was a week of, people think that run is over, but it looks like we may be rolling over again. So 133 itself is a support going into next week, and then the big support is at 132, so 130 pips range to the downside. To take us higher, we need to break over 134 really for sterling, the cable rate against the dollar. CAD has had a bad. What's CAD? Just feels right. CAD 138.60. So dollars had a really good week this week against the loonie. As we went into the 200 period here on the weekly market, we went as low as 135. 60 is that the way to get? We're now back to 138.60. So again, that brings in this top from the beginning of the year when we went to 139. Whether we actually get back to there, we're much closer to it than we were like this time last week, that's for sure. So it's had a strong week, maybe some profit taking next week, but we are burst quite significantly into the upper half of the Bollinger Band now, just like we burst significantly into the under half of the Bollinger Band. We had a continuing decline from there eventually after a peak up and down towards the end of the year. And the start of the new year, we were moving lower quite significantly into this 135 area, but here we are now at 138.60. So that's we've had a really strong week, dollar against the Canadian loonie. Aussie and Kiwi, and then finally the Swiss franc. What's the Aussie gone? Aussie, 68.90 now. So it's been a poor week for the dollar, the Australian dollar, under 70.70 all week, and closing at our lows of the week as well. So it's quite a significant down candle this week, a bit like the Canadian dollar. And if you look to the left there, you can see the size of the body of the candle. And that's the biggest significant losing week we've had for quite a long time, isn't it? Taking us back there to October 2025, a similar week when we went into .65. And remember, we oscillated around that and .66 for a long time before we rallied all the way to .71 towards the end of February before the war kicked in. And big down week. So 68 now becomes the key support area for the Aussie. As we trade at 68.90, haven't breached under .69. So can we get back over 69 and test 70 next week, or are we going to get dragged to that next big support area at .68 for the Aussie? Kiwi, similar pattern to its big brother across the Tasman Sea. It's not Tasman Sea, is it? No. Anyway, Kiwi under dot 58 and dot 57 is the next big support area. Here, 57.25 first from the beginning of the year. So all the gains for 2026 for the Kiwi against the dollar have been ran into the 200 period moving average. We got a rounding top and down we came. It may have been coming down anyway, but the war has just again exaggerated the bid for the dollar and the Kiwi down at 57. Where are we trading at the moment? 57.60. So still a good 60 pips above dot 57, but that's key support area. So 57.50. Then the bottom for this week there from 57.20 and then 57 itself. So another week for the for the Kiwi, and it's really all the bid we've seen on the US dollar, safe haven dollar. It probably will unwind quite quickly if we get a resolution of the war, but at the moment, there's no clear indication from either side. The Iranians certainly aren't backing down, and the mixed messaging coming out of Washington is not helping the things. Even though he's talking about Iran begging to do a deal, the Iranians don't sound like they're begging to do a deal. But yeah, down we go. Wait till these extra troops get there. Are they going to take Kark Island? Is this bottleneck of the Strait of Hormuz going to get relieved or not? Is NATO going to step up? Are the Europeans going to step up? There's meetings of the willing, apparently, but Trump very surprised the war he started on his own with Bidi Netanyahu. The rest of the world hasn't come rushing to their aid. So come on, say. And finally, the Swiss franc 79.62. Similar to all the other dollar crosses, 3-4 weeks of strength for the dollar, and eyeing the key dot 80 level again as we trade at 79.65 and above the into the upper half of the Bollinger Band here on the weekly time frame. So it's, again, see clear story of a strong dollar, weak gold, strong oil, weak indexes. It's very, very clear when trends like this are running. You want to be on the right side of these moves, and it's relatively simple trading as a trend follower when we get these clear directions, these clear moves. So obviously, bearing in mind, always manage your risk, and things can turn on a nine pin sometimes. So always watch what Trump has got to say. Basically, he's moving markets, a bit like he did with the oil market earlier last week. But anyway, hopefully that will be investigated. Anyway, guys, if there's no more questions, I will leave you in peace. Next week is a big, big week. There's lots and lots of data next week. Obviously, undermined or underpinned by the war. But it is the end of the. Let me just bring in the high impact things for next week. It's the end, obviously, of the month on Tuesday. So we got the end of the month, end of March, and that means the end of the quarter as well. But the start of the month, first week of the month, means, as usual, we have non-farm payrolls. So we got JOLTS, non-farm payrolls, ADP next week. That was last. This is this week. I don't know that didn't look right. Through to Saturday the front here. Next one. There we are. There we are. Powell's got a speech on Monday. I didn't realise that. Oh, Powell, so I did participate in a moderated discussion at Harvard University, naughty old Harvard. Expect some questions, so that'll be interesting. Certainly, Powell. I didn't realise that was happening on Monday, so we'll keep an eye open for that. As I say, it's jobs week, so we got the JOLTS on Tuesday, ADP on Wednesday, and then the Darling Lamont non-farm payroll on Friday. Remember that massive shock to the system, this 92,000 decline. We are expected to bounce back to creating about 50,000 jobs in the US. As we saw on the previous slide, it's ISM week as well. So we got ISM PMIs, both manufacturing and services, retail sales out in the United States as well. So all sorts going. We've got the consumer board, consumer confidence as well. That's even more important than the University of Michigan. There we are, consumer board, consumer confidence with the JOLTS numbers on Tuesday. Inflation from Tokyo, Europe, and there was a key country reporting inflation as well. Was it Switzerland? It wasn't Switzerland. It was another one. I can't remember who it was. Was it Germany. There we are. Germany on Monday. So all sorts going on to wrap up the month and wrap up the quarter, as well as kicking off the new quarter and the new month. And on top of that, we got this war going on as well. What more opportunities could you ask for, my friends? Whatever you do, whatever you're doing, stay safe, be kind to people, and always watch your risk management. So if there's no more questions, I'm going to wrap this up. Have a safe weekend, everyone, and I'll see you all Monday. It's also Easter weekend as well. So markets in the UK, Australia, Canada, all of Europe, they're all closed on Friday the 3rd. US is half day. Open on Monday. Monday is also closed in Canada, New Zealand, UK, Europe for Easter Monday. So shortened week this week, shortened week next week, shortened week second week of April as well. So lots and lots of day to get our teeth into next week as well. So I'll see you on Monday. Take care, stay safe, and have a great weekend, everyone. All the best. Bye bye.